Hey, I know that this time of the year, end of the year, is stressful for lots of reasons. Some of us are starting a diet, which is not so bad, but the worst part is getting ready for tax season, unless you're prepared. So today we are going to be joined with the Tax Pro specialist who is going to help us with the 5 major mistakes that childcare owners make when they're preparing for tax season. I am one of those childcare owners, and I can tell you I probably have made quite a few of these mistakes on this list during my 26 years of running a childcare center. So I would love to welcome you to the show, my tax pro. Tell folks a little bit about yourself and your company.
Yes, thank you so much for the introduction. I want to tell you first that I admire what you're doing. The director's chair, I was the director for many years. I started in the classrooms, then I worked my way up to a director at a daycare center, and then I opened up my daycare center in New York City. So I have over 7 years, 8 years when it comes to directors, and then I also now have a director in position and he handles it in New York City. So I just want to say this is a amazing spot for everyone to be in and learn. But a little bit more about myself and how did I go to the tax industry? So when I first opened up my daycare business, and as you all know, we spend a lot of money when we first opened up the business. My accountant at the time told me that I owed $15,000 on my first year, $12,000 and change. So I was confused. I'm like, what do you mean I owe this much? I spent so much money building this business. How am I not getting any refund back? Because at that time, you used to refunds. I had children. I was used to the refund. She said, no. I went and I started looking into the tax code and tax law myself. I loved what I was seeing. I seen certain things that she didn't tell me immediately. I had to let her go. I got into it so much that I went into tax school, opened up my tax business, and then I just focused on the childcare industry because I know at that moment in time, we needed it. If I didn't know it, I know there was a lot of us that did not know and didn't have this assistant as well.
Mm-hmm.
So then COVID hit. When COVID hit, I got into helping a lot of childcare owners with the PPPs, and I realized one thing that everyone had in common was that they did not have their books in order. It was so hard for so many people to get a PPP just because you had to show proof of your income and how much you was making and everything looking good. So immediately, I know that's one of the main things that childcare owners need to have in place. Get a bookkeeper. I know we try to do everything. I've been there. I wanted to be the janitor. I wanted to be this. I wanted to be the tax, the tax code, everything, because we try to keep money in our pocket. But at the end of the day, we're losing money because we don't have the right person that's putting the strategies into place. And once you get to a certain threshold when it comes to your income, you're just going to want to have the best of the best to keep that money in your pocket.
Mm-hmm.
So that's what got me into opening the tax business. And another thing is I realized that everybody knows CPA. So they're like, are you a CPA, Nekea? I'm an enrolled agent. And what that means is that I am the highest credential when it comes to the IRS. We took the classes, we got the exams, but the benefit of it is that I could fight for you in court, just like a CPA. So the CPA did 4 years. I did basically like 2 whole years locking into this, being the highest credential, and now I could fight for you as well. So that's the major difference of us.
Yeah, you said a lot there that really just speaks right to my brain. So one of the things is I was actually the very first childcare center, or one of the very first that got the PPP money because all my stuff was put together. But not because I'm perfect. I just happened to have graduated from the 10,000 Small Business Program. And part of that program was it was a growth plan program. We had to get all of our stuff together. So before I knew that COVID was going to happen, I had 10 or 12 weeks to really focus on my business. And thank God I did, because it just happened that when we had to prove everything and send everything in, I just happened to have it at my fingertips. But had I not done that program, I would have been like everyone else, scrambling. And I got it not once, but twice. I got both rounds, both times, really quick. But I love one of the things you said too, like the CPA not always knowing the things or getting you what you need. So there was that other credit, the retention credit. we didn't get it. We were told we weren't eligible to get it. And I'm like, well, how come? Because we kept everybody on. We didn't lay anybody off, and everything that we were supposed to use the PPP money for, we used it for. So yes, I think somebody who specializes in our industry is a lifesaver. So thank you. We need you as well. So number one you said was keeping your books together, making sure
Yes.
you have everything. What's number
Making
two?
sure you have everything.
Yeah.
Number two is actually getting your right tax professional. Like we spoke about, CPAs don't all special in tax strategies. Please know that. They special in putting your books. So you send them your taxes at the end of the year, your paperwork, and they are putting it into the system. And that is it. Now, if you have a tax strategist that is sitting there and implementing, right now, all my clients already know how much they're going to owe. We already put tax strategies into place before December 31st, because you cannot put strategies after the year's over for the year that you're filing for. So those are things that you would have to sit down and speak to them throughout the year, at least quarterly. Sit down with your CPA, sit down with your EA, and ask them, hey, how's my books looking? What's my numbers? Do we need to put any strategies into place? What could we do? And I'll sit down and I literally deep dive with my clients when it comes to that. So that is very, very important, because a lot of people think just because you hire a CPA, that means that the person is going to put the strategies into place. And if they don't do tax strategies, they're not going to lower your tax.
Yeah, it's just like a bookkeeper, basically, just making sure that everything is filed correctly, which is important, guys, which is
Very
important, you know. So, and I think what sometimes happens too is that maybe there's not a lot of classes for childcare owners to take to even know how to put things in, where to put things in, what not to put in your run through your school, what to run through your school. So I think that too is something that could be quite lacking in our industry. I mean, I've been in the field a long time. I've yet to see somebody come out and say, okay, childcare owners, like, we need this. Do you guys do work breakups?
That's actually great. I have a community. It's called Daycare Financial Institute. And we actually have classes that we go, but usually they are our clients, and we do educate them and so forth when it comes to that. But that's something that I should be giving to the community as a whole. So that's actually something to look at, because it is true. A lot of us are not educated. They don't teach us this in school.
Yeah.
They're not teaching us anything about taxes in school. So that is something to definitely think about moving forward.
Yeah, and even if you're good with finances and good with budgets and money, it still doesn't mean that you're going to know all these different strategies and, again, what you can put in, what you can't. I can remember my sister saying, hey, we bought a couple daycare vans. That should be somewhere in our write-offs, whatever. And they hadn't even asked us for like the receipts of the purchase and sales agreement. And she's like, nope, we need to get, but had she not known that, that would have just slipped through the cracks too. Yeah.
Yes, and depreciation. And when Trump had that in place that you could write off 100%, a lot of people didn't know this, especially during COVID. And then it went to 80%, and then it went to 40. All the big timers was taking advantage of that. All the 1%ers was running that play, but a lot of people wasn't educated, so we weren't taking advantage of everything that's out there. You need to be educated, or not even educated. Just have that right person that's educating you and learning for you, and you still have it all in one. So that's definitely important. I always tell everyone the tax code is your friend if you learn it. When I read it, you literally see that they give us business owners incentives. If you follow it, they're giving you credit here. They're lowering here. They're lowering here. If you just follow it correctly. So I'm not scared of the tax game because I learned it.
Yeah.
So I look forward to not hardly paying anything, little to nothing in taxes. That's the goal.
Yeah.
Keep that money in your pocket.
Yes. Well, and we need it now. I mean, our overhead is already enough besides adding taxes in, right? Labor is high, utilities are high. We're switching over to solar, I think, at our school. My sister's like, and we can get credits for that. So, yes, be smart in how we invest our money. So I feel like, should we talk about what we should be running through our businesses and what we shouldn't?
Yes. So when you say what you should be running, like commingling and so forth, what do you mean?
Yeah, I mean, like your expenses, like, all right, so let's say a vehicle, right? A vehicle that you use 90% of the time to go back and forth to work, right? Is that something that should be paid through your business? Not paid through your business.
Yes. So if you use your vehicle more than 50% of towards the business, you can write it off for your business. They would just have whoever's your CPA, EA, they would do the 50% for your business. I definitely recommend that if you are taking, let's say, a loan out now, definitely try to put it under your business name. Definitely try to build business credit. We get so much more money when it comes to business funding, business credit, and you're not touching your personal credit. So for instance, if I take out a business loan and the business loan is, let's say, 10,000, but it's not touching my personal credit. I still got all my utilization, even though I got $100,000, $200,000 in business credit. So that's something that a lot of us are not awake when it comes to the business credit. Business credit is amazing. Definitely stick to having your business and personal separate. That's another big thing that I've been seeing a lot. Have it separate, because what you do is once the IRS, if you ever audit and they've pierced and they're looking through your documents and they see that you have one thing that is, let's say, personal, and they start digging through it, they could go back many years. And then now you're owing for all those things that you was claiming as a business expense and it's not. They could go back and open it, and now you open up a can of worms and owe the IRS thousands and thousands of dollars. So you want to keep everything separate. You don't want to commingle and so forth.
Okay. So number one, we got detailed financing. Make sure you keep everything in there. Number two, let's not mix our personal and our business. Let's talk about a little bit about overlooking available tax credits. Like, what tax credit should we be looking for? What should we utilize?
So they have the Workers' Opportunity Credit. That is something that is not utilized as much. I use it quite often. So basically, if you hire in a certain criteria, so for example, if you hire, let's say, veterans, let's say low income, if they are on 10, if in New York City we call it HRA, but low income housing, if you hire somebody for that, let's say the assistant, let's say the teachers. If you hire, I use it for summer youth, which is when you hire teenagers in the summertime, they pay for it and you get credit up to from $16,600 per person that you can get. So that's something that's not being utilized a lot. Also, ex-felons is part of that. And then what another credit is the employer provider childcare credit. So that one, if you have a daycare center and you have, let's say, 30% of the employees' children in your site, then they could pay up to 25% of your expenses. Also, another way you can do this is if you open up a center, and let's say you just open up a center to keep daycare children or staff in your daycare, now they have to pay you the 25% as well for all the expenses, which is usually the cap is like $150,000. So these are just credits that are sitting there that nobody uses, and we're not using it as much as we should, because every year we could be using these.
Are you somebody who's still taking customers, taking clients?
Yes.
I feel like people are gonna reach out to you after this episode.
Yes.
I mean, right now it's January. I mean, right now where you're putting your stuff together, you're doing what you need to do. Like you said, I mean, maybe there's not much you can do for the past year, but it's the beginning of the year. Set yourself up for the upcoming year, right? So, that's our goal, right? Is to make sure that we are thriving.
Yes, and we work so hard to just give our money away, because I feel like when you're not putting strategies into place, you're just giving it away because you don't know better, or you don't have that person that's actually helping you because they're just doing their job, which is just filing your taxes, which is just grabbing the paper and filing it. So, go ahead.
No, go ahead.
I was going to say another one is structuring. The next one is structuring your business correctly. That is super important. And right now I see so many daycare owners structured wrong. So you're paying either more taxes in what you shouldn't even have to do, or expenses. So when I say more expenses, for example, let's say you are structured as an S Corp, and now you have to put yourself on payroll, and now you're paying these higher tax fees when you're filing your taxes, and you have certain requirements that typically, if I look at your taxes or your income and I see that you're not over, let's say, 1,000 net profit, I would have never told you to structure yourself this way. I will tell you to stay as an LLC because you're saving more money that way. A lot of people are following these trends without knowing what's
Mhm.
actually good for you. Everyone's situation is different. I can't go based on anybody and tell everybody, hey, structure yourself as an S Corp. You're going to save 15.3% and so forth, all the good stuff about it. But it's per person. So that's why I don't like to broaden it like for anybody else. Could definitely sit down with an accountant or EA and just learn what is best for your business, because you are spending more money if you're not structuring yourself correctly.
Oh, that is great advice. Yeah. I need to have you come look at my stuff. But we've had that conversation before. And so this is another one I would say, like forgetting to pay estimated taxes.
That's a big one.
Yeah.
That's a big one, because if you're not paying the estimated taxes, and if you're gonna owe more than $1,000, you have to be paying estimated taxes. And if you're not, what's gonna happen is they're gonna hit you with penalties and interest later on. So yeah, you're gonna get charged on that tax amount of whatever your net income was, but also additional penalties and interest just because you didn't do it quarterly. And it's really simple. It's online, guys. It's free. Like, it's ask your accountant, whoever's doing your thing, to just set it up for you. You can set it up and just have it going in.
And so it's better to pay them directly than through payroll.
Yes, it's better to pay them directly.
Yeah.
And then also, when it comes to that, if you pay too much, you just get a refund. It's not like you're losing anything. You understand? Because I know a lot of people say, I don't know how much I'm going to have at the end of the year.
Yeah.
It's okay. As long as you're supposed to look at your last year's estimate and go according to that. And then pay estimate based on your last year's income. Now, if you have less, no problem. They're going to give you back. If it's more, at least you know you're not going to pay a lot of interest on that amount.
Yeah. Wow, this is great stuff. So, what should people do right now? It's January. What should they be doing right now to set themselves up for success?
Guys, you should be, number one, organizing everything. Don't leave money on the table. I know we think that by just doing our own books or so forth, we're leaving so much on the table by not capturing everything. I definitely suggest, if you have, let's say, QuickBooks, there's an app, you snap the picture, you keep your receipts. The box receipts and having all your paper there is not needed. Snap a picture, I throw it away because it's on the cloud already. So I'm not worrying about my receipts and so forth. That is going to help you so much, because you are going to remember what you spent throughout the year. We don't remember. We think we remember. We think we remember everything. But we are so busy within the business that not having these things in place is going to make us lose a lot of money. Definitely sit down with your accountant, get everything in order, make sure everything is smooth so you won't be scrambling last minute. Definitely hire someone that knows the childcare industry. We don't leave those money on the table. So there's just a lot of things that we just have to just become more organized with ourselves, because like I said, we try to do everything, but we need assistance. As a team, we grow better and bigger. So that's my main thing. Just get organized, get structured, reach out to the right people, let them put those strategies in place, keep that money in your pocket because you deserve it.
Tell folks where they can find you. I know
Yeah.
you're on YouTube too. Tell people all the places they can find you.
So Childcare Tax Pros, we are on Instagram as Childcare Tax Pros, on Facebook, Childcare Tax Pros, Instagram. I even now have a Spanish channel. So for you guys that have Spanish speaking childcare owners, you guys can reach out to us. We have a whole page. I translated everything into Spanish. So we're good. We speak English and Spanish. So yeah.
All right, folks. So as always, remember, it's the small details that make a big impact on your success. And this is one of those areas you need to pay attention to, those small details. As always, thank you for tuning in. If you love today's episode, please don't forget to hit that subscribe button wherever it is. Thank you. Have a great day.